Welcome to RiskWatch. I'm Jonathan Ferguson. As part of its efforts to fight elder financial exploitation, the CFPB recently released a consumer complaint snapshot featuring complaints received from older consumers. Mike Stottlemyer of AffirmX is here to highlight key insights from the report and show you how to best help your elderly consumers. Mike?
Thank you, Jonathan. Of the nearly 1.2 million complaints received by the CFPB to date, more than 100,000 were submitted by consumers 62 or older. The actual number is probably a lot higher, as most consumers don't actually report their age. This means your senior customers aren't too shy to complain when they feel they've been treated unfairly. The data also show what it is older consumers complain about and what issues they're having in the marketplace. When consumers submit a complaint, they report the financial product or service as well as the issue they're having with the product or service. As you can see here, the financial product most complained about by older consumers are mortgages, debt collection, and credit cards, making up almost 65% of the complaints received. Comparing these numbers to the complaints from consumers under age 62 yields some interesting results. While approximately 26% of the complaints from older consumers were about mortgages, mortgage complaints from consumers under age 62 only made up 16% of the total complaints. This trend was also true for credit card and bank account or service complaints. On the other hand, older consumers are on the other end of the spectrum when it comes to debt collection and credit reporting complaints, where consumers under the age 62 were far more likely to complain than their senior counterparts. Since mortgages and credit cards made up the largest portion of older consumer complaints, let's take a closer look at specific mortgage complaints. Nearly 80% of mortgage complaints from seniors dealt with problems when you're unable to pay and making payments. Credit card complaints were more diverse. The largest category was billing disputes at 19%, with identity theft, fraud, and embezzlement at 10%. There was another area that was of far greater concern among senior customers than it was for their young counterparts. The report highlighted reverse mortgages as an important area of concern for older consumers. The majority of reverse mortgages today are home equity conversion mortgages. These are only available to homeowners who are 62 and older, so it makes sense that the CFPB is going to hear about this product far more frequently for customers in that demographic. The CFPB noted that many older consumers with a reverse mortgage reported being at risk of foreclosure when they were unable to timely pay property taxes and homeowners insurance. Some other specific issues highlighted in the report were confusion over mortgage servicing transfers, difficulties arising from policy, product, or institution changes, difficulties organizing finances after the death of a spouse or family member, and difficulties recovering from financial scams. It can be a scary world out there for senior consumers, and the CFPB stated that it is committed to protecting older consumers and fighting the financial exploitation of elders. As such, institutions would do well to ensure that they are actively working to address the concerns of their customers, especially those of the older generation.
Thanks, Mike. For more information about managing consumer complaints or to contact Mike, please visit riskinbox.com/resources. I'm Jonathan Ferguson for RiskWatch. Thanks for watching.